Good afternoon, everyone, and welcome to FinTalk. I'm your host, Renarda Joy, and I'm excited for you to be a part of this conversation. Many of you have been following the series, and again, thank you for your support. For those of you who are new, we've had this series that we've been doing throughout the month to help you fill some of your knowledge gaps when it comes to finances, wealth building, and different strategies. So this week we've been talking all about financial wealth building strategies, and today is nothing different. We have a very special guest. Her name is Courtney Epps. She's our esteemed guest, so let's give her a proper introduction. Courtney is a tax strategist, international speaker, and author of the best-selling books More Relaxing, Less Taxing, and What's Your Plan B? She owns a full-service accounting firm in South Carolina and serves clients in every state. She has owned her practice for 19 years. What sets this firm apart is the tax strategy that it offers to its clients, as the focus is not just to prepare your returns, but to help you free up some money legally, morally, and ethically. She has developed a broad expertise in industries, including traditional, home-based, and network marketing businesses. She works with clients from startup to $25 million companies. Throughout our conversation, Courtney will share invaluable insights and practical tips to help you harness the power of tax planning for financial prosperity. So sit back, relax, grab some pen and paper, and be prepared to expand your financial knowledge as we explore the nuances of tax strategy with Courtney Epps on FinTalk. So join me in extending a warm welcome to Courtney as we delve into today's compelling discussion titled Mastering Tax Strategies for Financial Growth.
Hey,
Hey,
how are you?
Courtney, how are you?
I'm doing amazing. How are you?
Awesome. Well, thank you for joining us. So let's just get started. To kick off our conversation, let's start with a fundamental question. What's the biggest expense that we often overlook?
So, taxes actually, if you combine food, clothing, housing, and transportation, you actually will spend more in taxes on all four of those combined together. So, it is the largest expense. It's about 40% of every dollar we make goes to pay taxes.
40%?
Yes. Yeah,
Wow.
that average. If you are a W-2 employee, that is the average. As far as business owners, it's much less than that.
So there's definitely tax benefits to being an owner, which I'm sure we'll get to that.
Yes.
So understanding the significance of this expense, how can we reduce it effectively, especially if you are a W-2?
So the biggest thing is having some sort of side business. That's a huge tax deduction for you. When you get to a point where you're making more than, I would say, about $250,000 a year combined total income, there are things like conservation easements that you can invest in and natural gas that you can invest in, things that will allow you not only an investment, but also massive tax deductions. So those are the three. When I look at how can I save someone money, I'm looking at their income level. And a conservation easement is just literally putting money into a program that buys land and gives it over to the government. That's not an investment, but it's a huge tax deduction. It's about a 5-time multiple, meaning that if you put in $20,000, it looks like you actually put in $100,000 tax deduction. So that's a huge deal. Natural gas is a great investment, but it's also it's a great tax deduction because you can write off about 85% of it. And then, someone who is not making more than $250,000 a year, the best thing they could possibly do to save, $4,000 to $8,000 a year in taxes is to have some sort of home-based business.
So that was going to be my next question when you said a side business, like a home base, like based off of, people like, what can I do? You need to figure out what you're good at, what people come to you for. And that's where you can start having it as an income to kind of offset some of the taxes that you were talking about.
Correct. Yeah. I mean, I definitely suggest, people finding some sort of network marketing company that they can, a product that they enjoy and love because it's already kind of set up for you. You pay a small fee. You already have the marketing, the advertising, you already have the products, everything set up for you. And the only thing you have to do is open your mouth and tell people about it. So that's why I really love the network marketing industry. It's a lot less room for failure. And then, it's already pretty much a cookie cutter business for you to start.
That's a good idea. So building on that, let's explore the differences. I talk all about real estate. Can you talk about the differences between short and long-term rentals when it comes to tax
Yeah.
implications?
Yeah, so the huge benefit for real estate is that, and most people may not know this, but if you make more than $150,000 a year combined between you and your spouse, then you don't get benefit from the losses over and above income from a long-term rental. So let's say you had a rental property and you made $50,000 a year on that rental property and you had $75,000 a year in expenses. Well, if you make under $150,000 a year, you could claim those extra $25,000 in losses, and that would go against your income. But if you have that long-term property, make over $150,000 a year, there's no benefit to you other than just wiping out the income that you have. Now, you don't lose that. You don't lose that deduction. You can carry it forward, and it just continues to carry forward until either you make less than 150,000 or it just kind of goes towards income. But it would really be nice to be able to claim that. So if you are in the market and you're doing short-term rentals, which would be like Airbnb, Verbo, anything like that, then you're actually actively involved in that business. And now it's considered to be tax deductible. So you can write off over and above your expenses over your income. So that's a huge deal. I actually had a client this week that just started a rental property this past year, and when I got finished with her tax return, I told her she owed 25 grand federal and state, and then but they had put about $80,000 or $90,000 into their property, and they were over 150,000. So I had not checked the box that it was short term as opposed to long term. And so I having a conversation with her, she's like, "Yeah, we Airbnb it." So I checked that box, and then she now owes $94 to federal.
$94.
Difference, yeah.
That's a huge difference.
Yeah.
Like, talk about opportunity cost that they have now to do something else with that difference. Wow.
Yes. Yeah, exactly. And I mean, and the great thing about real estate is that that property, you could always sell it if you wanted to, but you're building up an asset, and then virtually you're getting to write off every single thing that you're spending on that. So,
wow, I love it. Now, considering the complexities of tax laws, what are the advantages of working with a tax strategist? You have people who go online to all of these different online service providers. What's the benefits of working with a tax strategist?
So the difference in having a tax strategist and an accountant are two totally different things. So most of the time what happens is someone will go to an accountant and give them their documents and they'll prepare their tax return. What a tax strategist is looking at is trying to figure out what's missing. So what did you not claim? What should you have claimed? What other benefits could we bring in and pull in? Can you start a home-based business? Can you do other investment opportunities? So it's not just preparing a tax return. When you're using a service like, let's say, TurboTax, the major downside on that is if you ever get audited. And I had 3 clients audited in the last couple of years that used TurboTax in the past, not because they had a business, but it was because they did something incorrect. They checked a box incorrectly. And what ended up happening is it caused their entire business to be audited, even though that had nothing to do with the reason why they were being audited. And then one of them had to end up paying over 25 grand because she couldn't come up with her receipts, and she didn't have a set of books. She didn't have a P&L and a balance sheet. She didn't have a general ledger. She didn't keep her bank statements, all this stuff. And so none of that could be followed through. And so because she checked a box wrong, it then triggered an audit and she owes 25 grand. You're also more likely to be audited if you go through TurboTax or any of those other services. And the reason why is because as a tax preparer, we have to actually we have to do something called a due diligence screen. And that actually fills out and says, hey, we received this information. We have the proof that they have these deductions. they really can claim their children for the child tax credit. So all of these things we're filling out and telling the IRS that we saw the proof of it. And so you're just less likely to be audited. So, and if you do get audited, you want someone on your side who's going to be able to handle the audit and take care of it. And that's just not something you're going to get when you do your own tax return.
Huge difference. And I would imagine as a tax strategist, you kind of sit down and look at their long-term goal to make sure that as time moves on, everything is in alignment with where they're trying to get to, with giving them
Right.
the best tax strategy towards that.
Right. And the biggest thing, I mean, you can't do tax strategy in a year that you're not in. So, I mean, I can't give you strategy for 2023 and 2024. And people aren't paying attention and worrying about strategy because they don't realize how much money they're paying in taxes. But if you actually look at how much money you're paying in taxes, that should be your number one goal, is how do I decrease my tax liability?
Yeah. So we've had conversations this week, and that's definitely one of the same information that we've been getting from each guest that we've had on about that opportunity cost. Now you have the funds that you've saved, and you can do so much more with it as opposed to giving it away. So delving a little bit deeper, what are some common tax planning misconceptions that individuals should be aware of, or what you commonly hear from others?
I think the biggest thing is that people, especially if you have a business, so many people believe that they're not allowed to write off certain deductions, or there are going to be certain things that they write off that's going to trigger them to be audited. So they are more conservative when they take advantage of tax deductions. And what I would tell you is that if you are truly attempting to earn an income, whether that's in real estate, whether that is in a business, you should be taking advantage of the tax deductions that you're entitled to take. And don't let anyone scare you into believing that you're going to get audited for it. I have probably had 10 clients audited over a 24-year time span that had a business. All of my clients have businesses of some sort. Some are just in real estate. Most of them have some sort of home-based business. That's how they came to me. That's how they found me. But we have anything from chiropractors to, doctors. We have a fertility clinic. We do gyms. We do, manufacturing. You pretty much name it, and we have it. But the biggest thing that people that I see and people overpaying taxes is that they just aren't taking advantage of the deductions that they're entitled to take. They're either too scared or they don't know what they are. And so one of the things I can probably send to you and you can give to the group is a deduction spreadsheet that we have created. We have one for rental properties that they can, everything that you can write off for having a rental property, one for just a business, anything that you can write off for having a business of any sort. So that'll be super helpful. And then the second thing, I think, and the biggest, I see typically three things, and most of my clients are business owners. So the second thing is their structure. They're not structured properly. They don't have an LLC, and they're not treating that LLC as an S corp election for tax purposes. And what that's doing is causing them to have to overpay in self-employment taxes. So I don't want to necessarily get too much into detail on that, but the structure is a huge, huge deal for people and why they overpay in taxes. And I would say the third thing is when people actually are starting their business and their structure is set up properly and they're claiming the deductions, they're just paying themselves way too much in payroll, which is forcing them to overpay themselves in self-employment taxes.
Wow, those are all three good ones. I would imagine lack of knowledge. So
Yep,
thank you for shedding light on that. Now, shifting gears slightly, let's discuss some effective tax saving strategies that individuals and businesses can implement just so that they can start to have some sort of financial growth. Because you usually don't think of financial growth when you think of taxes. Those two aren't usually in the same sentence.
Yeah. So, one of the things, find some sort of business or get involved in real estate. I think those are two really good options. There are obviously syndicates out there. There are places that you can put money into and you can invest in real estate properties and like in apartment complexes and commercial buildings and things like that, but you're not involved in it at all. So those are sometimes really good investments, but if you want to get hands-on involved, especially if you're making more than that 150,000, it would be a good idea to go the Airbnb, VRBO, short-term rental, that would be a really good option for people that are making over $150,000 a year.
So, okay, so let me just, I could talk to you for a while. I just got a couple more questions
Yeah.
because this is all great information. Given the importance of proactive tax management, what advice would you give to those seeking to navigate the process? Because I remember one year I took a shoebox to my to my tax strategist, and they were just like, "What is this?" Like, it was not organized. It was just, "Here's a shoebox, you do your thing." But
Right.
what advice would you give to someone trying to navigate this process?
Yeah, I mean, the first step, I think, for anyone is just to book a tax strategy session with us. And I don't know anybody else that's in the accounting world that does tax strategy. So if there was, I could give you a handful of people, but most you've got strategy and then you have accounting services, and they don't mesh and do both. So it's really hard to find. Like there's a really great book called Lower Your Taxes Big Time by a guy named Sandy Botkin. He was a tax attorney and he worked for the IRS. And he's also a CPA. A lot of the stuff that I speak on is in his book as well as in my book, because I condensed a lot of what he said into an easier version, easier read, 5-hour read for people to understand. But it's really hard to find a strategist that the accountant will actually listen to. So unless you're going to somebody who does both, you're going to have a really hard time. You're just going to argue back and forth. So, because what I have learned about accountants is they do not all think alike. And if one person says something, another person may say something completely different. No, you can't do that. Yes, you can do it. What, blah, 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 blah. So find somebody who actually is focused on strategy. That's your first step. And it needs to be done in the year that you're in. So if you're trying to save money this year, you need to be having a conversation with a tax strategist right now to say, hey, what do you suggest that I do? And based upon your income is going to obviously be determinant on what you should do. But simple thing, if you just find a business, that's going to save you between $4,000 and $8,000 a year in taxes. And so that's typically the easiest way for me to help you save money in taxes. And then when you start saving money in taxes, then you can start investing in other things that you didn't have the money to invest in. So, find a good tax strategist that also does accounting, does taxes. That's crucial. Has to be done in this year. And then I think the last thing is making sure that you're keeping record of all of your expenses. So there's a really good tax software accounting software called Hurdler. It's a bookkeeping software. It will allow you to pull in transactions like your credit card transactions, your bank account transactions. It'll track your mileage for you. It will allow you to upload your documents like your receipts and things like that. So you definitely want to be audit proof, and that software would help you in that process. But a good accountant's not going to take a shoebox of information or even bank statements unless they're doing your bookkeeping for you and charging that fee. So you need to have some sort of software that you're tracking all these expenses throughout the year, so you're seeing what you're spending. And then a tax strategist can then take that information and say, hey, based on what you're making, here's what we need to do now.
Mm-hmm. I mean, you've given us so much information. Is there like one key takeaway tax planning advice that you'd like the audience to remember out of everything that you've said?
Really the biggest thing is just going outside the box of being a W-2 employee, understanding that if we're crazy.
Are you there?
Yeah. I'm here.
Go ahead.
Okay. All right. So, sorry that I don't know what that noise was, but if 40% of every dollar that you're making is going to cover taxes, then you've got to figure out, how do I get rid of that 40%? Because what I have realized is that if we're paying 40% of every dollar we make to cover our mortgage, and then we're paying 40% in taxes, there's not a whole lot left to live off of. So you've got to be able to free up that money. So freeing up that money could look like starting with real estate. It could look like starting with a network marketing company. It could look like literally starting to cut grass. Take your lawnmower and start cutting grass for people. It could be that you're a blogger. I don't really care what you do as far as the business goes, but you have got to find some sort of business to get yourself out of the tax system that was created to steal wealth away. And so people ask me all the time, well, Courtney, why in the world was this tax system created this way? We have to understand that business owners create economy. They're putting money back into economy every single day. They're the ones selling, right? And they're the ones making money. And then they're spending that money back into the economy. And then they are then hiring employees. And 70% of all jobs in this country is actually created by small and medium-sized companies. It's not by large corporations. It's by small to medium-sized companies. And so we have to get the tax benefit as business owners so that we actually have the extra money to hire employees, and then those employees then pay the lion's share of taxes. So when you understand that employees work, they make their money, they pay taxes. There's not a whole lot that they can do about changing their tax liability. But as soon as you become a business owner, and I'm not saying quit what you're doing as a W-2 employee, I'm saying add on a business of some sort, whether that's real estate, whether that's network marketing, some other home-based business, brick and mortar, I don't really care. But when you add that, now you're in the second business owner tax system, or the second tax system, which is for business owners. And so you're making money. Then what's left, then you have all this extra money after all of your expenses. You buy some of your needs and a lot of your needs and wants out of that. And then what's left over after you have paid for the things that you need and that you want, now you pay taxes on that smaller amount. And one of the big deals, which I'll just say this as kind of closing, people don't realize is that as a business owner, there's something called a qualified business income tax deduction. And what that means is that I don't have to pay taxes on 20% of my net income. So off the bat, if I were to make, $100,000 a year as a W-2 employee, that W-2 employee is going to pay taxes on that $100,000. If I'm a business owner, I'm paying taxes on $100,000 minus my expenses. Maybe let's say I had $25,000 worth of expenses, so I have $75,000 left over. And then from there, I don't have to pay taxes on 20% of that, which is another $15,000. So now I'm paying taxes on $60,000. And then you as a W-2 employer are paying taxes on $100,000. That's a huge difference. So, I mean, I could go on and on things that you could do, but I mean, that's essentially just start some sort of home-based business and go out and attempt to earn an income so that you can start taking advantage of these tax deductions.
Yeah, that business credit that you were just talking about, that's a game changer.
Yes.
That can be a huge difference. I didn't even know that one. So thank you so much.
You're welcome.
So Courtney, as we come to an end of today's insightful conversation, first, I want to say thank you for being here. I know this is tax season for you, so I appreciate you taking time out of your busy day and just sharing all of your valuable insight with our audience. It's been invaluable. But before we sign off, I have some exciting news. As Courtney was saying, she has given us that deduction spreadsheet. Your office did send it over to us.
Yes.
So if you do want it, all you need to do is send me an email. And I apologize, I can hear the reverb. It's coming back from my end. But you can send an email to hello@renardajoy.com, and I'll be more than happy to send you over that deductible spreadsheet that Courtney was talking about. Additionally, if you're looking for some tax planning ways to up-level your tax planning world, please book an appointment with Courtney. Here's her information so that you can book some time with her. You need to maximize your financial potential, and sometimes it takes getting with an expert that knows what they're talking about. She just gave us a lot of valuable information to help us. Like, I appreciate it. Again, thank you for your insight and your time. And thank you all for tuning in today to FinTalk today. I hope that you all have gotten some great information. Thank you for continuing to support us throughout this series. We're almost done, a couple of more conversations. But until then, I want you to stay empowered, stay encouraged, and keep striving towards financial independence. Have a good day.